As you guys heard a little bit earlier today, we are thinking very seriously about blockchain. For those of you who don't know me, I'm the principal with the team. I lead our blockchain investing business, as well as a few others, VR, AR, and serverless technologies. In 2013, I did the seed stage investment in a company called Ripple. This has gone on to do quite well, and they were actually one of the very first companies ever to do a token offering, which I'm sure we'll dive in a little bit today, since it's certainly interesting. But we think this is the next generation of cloud infrastructure in a much more distributed sense. And it's going to reinvent a lot of the way that we think about technology and technology investing. And I must tell you, as a VC who has invested in entrepreneurship and technology for a while, it's been an interesting thing to wrap our head around of, does it disintermediate us ourselves? In fact, a lot of these companies have gone on to do ICOs in no time at all and raise hundreds of millions of dollars in 20 minutes or less. And that's, of course, as somebody who, spends my entire life thinking about investing in technology and blockchain technology in specific, it's very interesting to think about what that means to us, and we'll talk about that a little bit today. But to get us going, I actually wanted to introduce Brian House, who's an EIR with us, thinking very seriously about this space, and he's going to talk a little bit about the future of blockchain, an initiative we're looking at. There you go. I think that should turn on.
This is on. All right, great. Thanks, Richard.
There you go.
So I'm here to follow up a little bit on what Michael talked about in the opening keynote, and that's the Future of Blockchain initiative that we're launching very shortly here at Underscore. So as we all know, and we're seeing every day, that blockchain is at the center of the technology hype machine. Brian Halligan talked about being Web 2.0, the replay of that he saw. I hear all the time about how that reminds them of 1993. And just so you know, in 2017 alone, there's been 188 venture deals, equity financing deals, for over $830 million already this year. So there's a lot of money from venture capital flowing into this. But then there's a question here, is this a bubble or is this a platform? Well, how big is this? At the same time, that $830 million, just in Q2 and Q3 of this year, since July, there's been 55%, something like 140 ICOs that have raised over $2 billion. So there's something happening here, and there's a lot of questions around, is this a bubble? Is this a platform? How much is this speculation? How much is this real? And we saw Michael talked about the boom, bust, and then the sort of platform and value creation in his cycle. So this is really what the future of blockchain as an initiative is designed to dig into and to ask questions around. It's designed for business leaders who are considering implementing this technology, for technologists and entrepreneurs like the people we're going to hear today that are building new technology, as well as investors to figure out where is the market going, how do we see into the future, and how do we start to quantify those perspectives and give actionable insights around what's happening in this market. There are lots of surveys that in the blockchain market. CoinDesk has one, State of Blockchain, which is a great survey on investor sentiment. If you're you talk to your financial advisor, the charts and things you see in there look just like what you get from your financial advisor around investment assets. There's CB Insights just did a great survey. They just released it this week with Forbes magazine on investment trends and what's happening, where money's flowing. But we haven't really dug in. There's a hole in the market around what are the challenges that organizations face as they look to adopt this technology? What are entrepreneurs running into when they talk to prospects and potential customers? Where are the roadblocks, the inhibitors that are slowing down this market? And what are the things that they can unlock to accelerate and have this market grow? So what we want to do with this initiative is identify new opportunities to grow businesses, to build applications, to build protocols and monetize those protocols, for help organizations think how they disarm potential threats. In some ways, blockchain is very, very disruptive to industries, and we see, for example, financial services adopting this and getting in really quickly because they don't want to be disintermediated. And as well as creating new business, new opportunities, and catalyzing new relationships. So this is very much an exercise in really understanding and listening to the market and helping understand where this market's going and how to shape it. So we've done this before. This is a playbook that we've seen work very effectively. Michael talked about this. We've done it with the future of open source, when open source was a scary prospect, especially in the enterprise. The future of cloud, when there's lots of hype around cloud, and everybody said cloud's going to change the world, but nobody really knew how to build a business on it yet. And this reached hundreds of thousands of people. And so it's a great way to listen to the market and then come back and share those insights with those markets in an open source and open way. Part of sharing that is having conversation and getting those conversations, getting the market to listen to that. So there's lots of great places we've touched. We've also created public forums. So we've typically used keynote presentations at large conferences, but we'll do events. We've seen some important leaders here. We're still working on the diversity part of that equation, but there's great entrepreneurs here, so we're working on that. But it's about fostering discussion, listening, and then sharing those results in a way, because we firmly believe that entrepreneurs and technologists are going to shape the future. And a lot of what we see in this market is we don't necessarily know what we don't know about new opportunities. We can disrupt and recreate business models that we already exist, but there's lots of ones that we haven't really thought of yet. And that's really where entrepreneurs and technologists come in, to define those new opportunities that the blockchain unlocks. So what we want, that call to action for all of you, is to get involved and join the blockchain core. This is one of the cores that we run at Underscore. We want to get people involved in the design of the survey, to get feedback on that, to make sure we're asking the right questions, and do that over time. And then help us reach the market, so that way we can get feedback and we can listen to what's really happening, what people that are doing this on the front lines, what are they saying, so that way we can share those insights and help entrepreneurs, technologists, and business leaders make better decisions about where they want to go. So you can connect. You go to send an email to blockchain@underscore.vc. I'll get that and I'll follow up with you. We also have just launched a Twitter thing, Future Blockchain, spelled funkily, so we'll see more on that. We know you're in the room today, so we'll send you all an email so you don't have to write it down. But the call to action is going to come, and I encourage all of you to get involved. So that's it. Thank you.
Great. Thank you, Brian.
You're welcome.
Oh, thanks. Cool. So it's my pleasure to introduce the rest of the panelists today. The main event, I know you guys are here to meet these guys, and so I'll introduce them one by one, starting with Ethan. So Ethan's a guy we got to know. Come on up. We had the great pleasure to meet him just recently. You'll just be on the end. And he's working on a new cryptocurrency product for exchanges, and he'll talk a little bit more about that. We have Jeremy Kaufman, founder of LBRY, coming up. Watch the waters. The question will be who knocks the water over first. And then we have Dave from Sia. Welcome. We have Anders as well from Circle. Great. Thank you, guys. Sorry, it's a little crowded up here. Yeah, maybe I'll stand. I don't know. Can I stand for 30 minutes? Cool. So I think as a kickoff question, I'd love to ask you guys just to introduce yourselves, what got you interested in this whole space, and then tell us a little bit about what you're working on today and why you think it's an interesting proposition and exciting. So maybe starting with Ethan.
So I'm Ethan Heilman. I'm working on.
I don't think your mic's on. Maybe just push it up. Oh, it is. Oh.
Test?
Yeah.
Test?
Oh.
Thanks.
So I'll fix this guy.
I'm Ethan Heilman. I'm working on software to increase security for people that are doing cryptocurrency trading. I got very much excited about this space. Actually, a little bit before it happened, there was a lot of interest in the early 2000s over eCash and digital gold, and then when Bitcoin happened, it seemed like it was now actually possible. A lot of those early businesses didn't do so well, So in terms of what I'm really excited about, I think that we've sort of proven that people want blockchain and that blockchain has a lot to offer. And now we have to figure out how to scale it and onboard everyone in the world. And so that's what I'm really excited about.
Great.
Hi, I'm Jeremy Kaufman, the founder and CEO of LBRY. I've been into sort of decentralization and peer-to-peer technologies for a long time, way before Bitcoin. And I'm always interested in ways that we can use technology to have further control over our own lives, and that was part of what I found that appealing about the technology. And that was part of why I founded LBRY, which is a entirely decentralized way for people to distribute and monetize digital content, which is a fancy way of saying we're trying to build services like YouTube, but not need a Google to rely on them. Do them in a way that entirely from end to end, anyone can publish and monetize or publish for free a piece of digital content, have other people consume it, and do that in a way that's not reliant on any one company or any one point of influence.
Hi, my name is David Vork, and I'm co-founder and CEO of Saya, which is a decentralized cloud storage platform. And so what we really want to do is make it so that you can put your data onto the cloud without giving control over to a party like Amazon or like Apple. So today, when you put data on the cloud, you really like give up that data to a single person who now more or less controls your destiny. And you sign, this terms of service that I'm sure we've all read.
Twice.
And who knows what's in that. We want to create a cloud that can be competitive at the infrastructure level, in terms of speed, in terms of price, while also allowing you to be the master of the destiny of your data.
That's great.
Yeah.
End on that. I love it.
Well done. How do I follow that up? I'm Anders Brownworth. I work with a company called Circle, Circle Internet Financial. Almost 10 years ago, something actually fundamentally brand new appeared in the computer science world, and we all noticed that. So we came to it from many different ways. It kind of hit me on the side of the head one day. I have a great story. I'll tell you after. So got involved with Circle, and Circle is essentially a blockchain-based payments app initially. We also run one of the largest OTC trading desks for cryptocurrencies in the world. And you asked sort of where I, what the future is, where I sort of, what am I excited about? And what that would be is, payments going to zero, transfer, FX, currency to currency going to zero, essentially the HTTP of money. How would the internet define a way for you to move value regardless of type from any place to any other place, just like you send an email? I'm very excited about that.
That's great. You can hold on to that. So actually, as a starting point, just to level set so we know kind of who's in the audience, I'd be curious, who in here, raise your hand if you own any cryptocurrency at all? That's impressive. Okay. Now, how many of you own anything besides Bitcoin and Ethereum? Hey, nice. Got some crypto enthusiasts. Good stuff. Now, how many of you own more than 10 cryptocurrencies? Nice. Future portfolio managers right here. Cool. Well, I think fortunately most of the crowd's fairly well informed on it, but I'd be curious, as a starting point, just to paint a picture in 10 years for you guys of how do you think this will impact, what's going to change, how do you see us in 10 years interacting with technology very differently?
So I think if you had asked the same question in 2000 or like 1995 about the internet, it would have been very difficult to come up with an accurate answer. But I think that's sort of where we are, is like 95, 97 for blockchain. And I think that the ways that it's going to change will be surprising, but will also be like super ubiquitous. I think venture capital is going to change, banking's going to change, like any sort of financing, any sort of payments, remittances are going to change. The way businesses interact with each other are going to change. But not at like a, new type of society sort of way. It just, things are going to get a lot smoother with businesses working together.
Yeah, I would agree with a lot of what David said, or at least hope that those things come to happen. I think the strongest thing that I feel the most confident about happening is that we will see the development of more open source protocols that replace closed platforms. To me, one of the most clearly powerful problems that blockchain can solve is this sort of collective action problem around creating create open source shared protocols, so we can replace existing centralized technologies that are owned and controlled by a company by protocols that are then instead controlled by the people who are actually using them, right? Like we see that basically every large company, once they get large enough, they stop serving their users, and this technology can prevent that from happening.
I think in one way we won't entirely see the changes that will happen. A lot of the proof of stake and proof of work consensus things will be integrated into technology in such a way that things work better and new businesses are possible, but most people won't necessarily recognize it as blockchain. They'll just sort of think that that's the way things work. Similar to how a lot of the cryptography in the 80s is now highly integrated into the web, but no one is like, I'm using a cryptography platform, they're just going to Facebook.
That's great. And so for you guys, you're working on fundamentally pretty important things, but they're early in their infrastructure, right? Taking on storage and reinventing storage, taking on payments, taking on media, where it sits anywhere in the world, and the way we transact. What are the early in applications? Like, where are we now? Could you really build a fully distributed app right now? Or are we focusing pretty on the infrastructure level today?
Well, it's very, very early days. I would argue that it's pretty easy to say that finance be the one that's working right now. There are a lot of other sort of low-hanging fruits. Yeah.
Yeah, I mean, I think that at the end of the day, blockchain is best at money. Even our storage platform, really, we use the blockchain to pay people, and then the storage part just comes from knowing that you can, as a host, serve data and get paid, and knowing as a renter that the host has to commit in order to get paid. But it's still the word paid is still there, and I think that's mostly where we're going to see blockchain. And I think that on a layer, we're still very, very low and very early, and working on just core stuff and not really user-facing stuff yet.
I would generally agree with that money and payments are the most obvious immediate application. I would probably feel a little bit differently or extend that answer, that to me, blockchain is a new way of reaching consensus that doesn't require a single party to be in charge of how that consensus is reached. And when I say consensus, I use a broad term because that can be consensus around a variety of different states of affairs. And so anytime that there are situations where it's difficult for parties to cooperate and agree on how they're going to reach consensus, blockchain can be a really powerful solution.
So I think short term, definitely payments are going to be where we're seeing a lot of the user-facing stuff happen. But I just want to look back 5 years to 2013. If you went on one of the services that provided academic papers, back then you would see, depending on which part of 2013 you were looking at, you either see 0 papers, or you'd see 1 paper, or you'd see 4 papers. Now if you go on there, you're seeing 100, 200 papers a year, and it's accelerating at a pretty steep rate. So I think we're starting to see some extremely interesting technologies that probably won't hit as short term, but as payments go to users, we're going to see these other technologies, especially in regards to privacy, like we've started to see with Zero Cash, but I see that as more of a harbinger. As more and more of this research gets interested and comes online, and then is brought to market in 5 to 10 year periods.
And so what do you guys think the challenges are for adoption?
I think the biggest challenge is usability. The first time you put someone, and this is sort of a complaint that I think we have to fix. The first time you show someone Bitcoin, you can tell them it's this great system, they love it, and then they go to do something, and they have to wait 10 minutes to an hour. And I personally think 10 minutes is too long. Like when you're waiting, there's this sense, indecision is almost physically painful. So I think that what we need is we need to get to the point, and it's there in the research literature, but it's slowly being brought out to get to the point where transactions happen instantly, even your first transaction. So you click and like you're running. And I think that those sorts of usability problems, which aren't security problems, that are just purely like perception and that feel good sense of click and it happens, are overcome.
Completely agreed with the need for further and better usability. I think there are definitely still really big scaling questions, at least when you're talking about public blockchain technologies, that there's no answer that we can be confident in right now. So that's like one of the biggest questions that's being faced for sure.
I think that we have a lot of common sense to build. I might look back at credit cards, and like most of us know how to use a credit card, but there are just common sense that you have about not giving it to strangers, and like, or even like writing checks, things that you do and you don't do with checks, that the banking infrastructure had to like build into the general population, and now we have it, and so we take it for granted. I think we're going to see a similar curve in blockchain where there's a lot of things that are just weird and unfamiliar, but they're pretty simple. And I think in the next like 5 to 10 years, we will see, as blockchain becomes more mainstream, we will see this like common sense flow into the population that will allow a lot of the usability hurdles to be automatically crossed.
Great. So there's a lot of talk around, should there be one blockchain? Bitcoin, of course, has garnered a lot of attention. A lot of people doing interesting projects around that, but in some ways its simpleness is kind of its exciting and interesting part. But I'd be curious of how many blockchains do you think there will be in, say, 5 years?
An infinite number. No, there's some are good at some things, some are good at others. You have the ability to cross blockchains, move assets between them. Some are really good kind of just between two parties. It would be called a state channel. To very extremely quickly pass state updates back and forth, and those will appear and die. So it depends on what you call it, right? But ultimately, there's going to be a very high number because computers are very good at using what the right channel for something is. So I think the answer is probably extremely high.
Yeah, I would maybe try and quantify it. Just really risky number. I'm just going to throw out, in 10 years, I think there will be more than 1 million blockchains that are all being actively used. And perhaps not like, you're not going to go to a leaderboard and like you would today. It'll all be like behind the scenes and handled mechanically. But I think there will be like millions of actively maintained blockchains.
Like how many databases will there be in 10 years? I mean, I don't think blockchain replaces every database by any means. That's not what that answer meant to imply. But the notion that one blockchain is going to have all of the world's data being written to it, I just think it's nonsensical. Databases are tailored to the applications that you're using them for. I mean, if you're talking about a public blockchain, I mean, there probably are some minimum thresholds there where you're not going to do blockchain for every kind of thing where you'd write, use a tiny MySQL database or whatever. But I agree with David that there's going to be a very large number.
Yeah, I think that, I guess the question for me is how many different types of blockchains will there be? And I don't know how to answer that question. And I think that if you did ask someone 10 years, they might not be using the term blockchain for all of it. And there might be some contentious debates about what is a blockchain. Is some sort of replicated database a blockchain? Is some digital fiat that has some trusted parties but are distributed a blockchain? But I think that we'll just see this widespread diffusion of technologies like proof of work or proof of stake for consensus, like throughout the ecosystem. And if it's an authentication system, do we count that as a blockchain or not?
Sounds like very clearly across the board, lots and lots of blockchains. But I'd be curious of what the implication of that is in terms of how many cryptocurrencies you think there should be.
One per blockchain.
Yeah.
Yeah.
I mean, we this might be starting Ethan's debate already, but I mean, if you're talking about a public blockchain, you can't have one without an asset that's being traded, right? That's what, or something at least that can be exchanged, maybe not traded. That's a necessity to have a public blockchain. And I think that there are some very fundamental differences. There's such fundamental differences, in fact, between public blockchain and private blockchain that I don't even think it's, that we need to always use, either always use those adjectives or develop different language around what's what.
Do I dare ask any of you guys to describe what an ICO is? Or an initial coin offering or a token sale?
It's why you're sitting in this room.
Yeah.
I'm like tempted to give like 5 different joke answers right now.
Go for it.
An ICO is a way that you scam money from foolish libertarians. An ICO is a way that you raise money for a company just by doing something that's already been done before and throwing the word blockchain at the end of it or something. I don't know. No, it is. I mean, it is a real idea. I don't mean to disparage the idea. I think it is a real idea that will power a lot of things. An ICO is a way to raise money for a company or an idea, essentially, right? It's a way to say, I'm gonna create this technology or this service that's going to be powered by a blockchain. That blockchain is going to have these blockchain assets. To get that, if we're putting that I in ICO, then I'm gonna take this money. You're gonna get some of the assets. I'm gonna use that money to build the service that I've described.
Great. So, I think I bring it up because. Oh yeah, sorry.
I was just I think that ICOs are interesting because it makes it very cheap to do financing, in the sense that, like, if you talk about doing an equity round for like $15,000, that really doesn't make sense. Like a priced round, your legal fees are going to be more than $15,000. But with a token, you actually can like do something at that, like at a short scale for a low value, and they aren't low value now.
If you're selling a token right now, you're going to need to spend more than $15,000 on legal.
That aside, I just mean like the practical mechanical work that it takes to do a token sale, and then when you have the token sale, you're liquid on it immediately, and you're in this sort of like computerized world where you can trade things very easily. And so I think that's the revolution that we're seeing. And the catch is that legal is now catching up to it and saying, hey, wait a minute, these are a bunch of fraudulent securities offerings, and you're seeing a lot of abuse in the ICO space because it's so easy and people are so hyped about it. You can create a white paper that is meaningless in front of a technical person, but to a non-technical person seems like magic, and raise money. And so I think that the innovation of ICOs is that it creates this highly liquid, low barrier to entry mechanism for doing essentially equity and securities, and then the catch is that there's a reason that it's hard to create securities, and so I think we're gonna see a lot of that backpedal.
So to add to the obvious, why ICO instead of VC round, right? There's pluses and minuses to each. First of all, I'd argue with an ICO, the way they're structured today, it's all carrot and no stick. That could be a very unhealthy environment for a group, not even yet a company. They also, on the positive side, come with a giant network effect. They arrive day one with a whole bunch of people that are really interested in the long-term future of this token, or else why would they buy in the first place? You have, negatives, so like it doesn't show up with any advice. If you're dishonest, maybe you go buy a boat and retire, I don't know, right? But it doesn't show up with, an advisory group or a board seat that somebody can return some value to you or introduce you to people, right? So I think these are very sort of different things, and there's a lot to talk about in there, and I'm sure you're going to get to it, but I thought I'd throw that out there.
No, that's helpful. And just so you guys have a few stats that I think are certainly interesting, or within Q2 of this year, companies raised $800 million in ICOs, and those are blockchain-related companies. The number of VC dollars going into that was only $250 million in that same quarter. So 3 times more money was raised via ICO than from professional venture capitalists in that quarter. And in fact, if you look at any of the more recent data, that's only continued to accelerate. So it's certainly pretty interesting for us, as individuals who are investing in open source technologies. It's actually a pretty significant innovation in a lot of ways. We've been thinking about open source for a long, long period of time. And for the very first time, you can actually invest in the protocols that people are using. And these were previously completely uninvestable technologies. You think of SMTP, Simple Mail Transfer Protocol. Basically, if you've ever sent an email, you've used this. It's one of the most incredibly widely used protocol technologies. Now, it was funded entirely by grant, and the individuals who created it, because it was given away to the world, were never able to capture any of that value. ICOs and token offerings generally are a way to both fund that activity and build the value alongside the companies, and in fact incentivize people to continue to build around it and share in that appreciation. And it's interesting because there's a lot of other considerations that VCs like ourselves have never had, like what does it mean to have liquidity for these things? Where we're focusing a lot of our thinking right now is around bringing venture best practices to the practice of ICOs, because a lot of the companies we've invested in actually are beginning to do ICOs or have already done those. And so it's an interesting moment for us as venture capitalists. But back to you guys, how do you think of venture capitalists? Would you ever, go up and down Sand Hill Road to go raise a venture round if you were starting a new project today?
I think, like Anders said, there's trade-offs. So and they're very real. It's not all good. So if you're not working with a VC, you do lose out on the kind of like advising and relationships, introductions. It can be a status signifier, right? It's different to have had this institution invest in you than to have raised the money from the public, and it can. It's also still safer. I mean, I still certainly anticipate a hammer dropping here to some regard in terms of some of the things that have been happening in this space. And also they're not exclusive. So I think it's at least worth considering. I will say, in terms of our company, we actually didn't do an ICO, and we were originally funded by a venture firm here in Boston. Pillar, I guess I should plug them. So yeah, thank you, Pillar.
Come on.
Yeah. So I'm very glad to be working with a VC, and I would not necessarily, I wouldn't tell someone, hey, you should only do an ICO and just do it that way.
So I would also mention that I think it depends on, does this make any sense? Like, if you have a company that has nothing to do with something that needs to be tokenized, like an asset that needs to be tokenized, maybe that's not a good idea. If you have something that would really lend itself very well to it, maybe it's something you would do. So yeah.
Yeah, great point.
I just also wanted to, one of the things when I look at ICOs is that they get all the money up front, so there's maybe not an incentive to keep, there's no vesting schedule there. So one of the projects I'm very excited about is Zcash, where instead of doing an ICO, they had, as time went on, they would get coins assigned to themselves over a multi-year period. And so in that scenario, both their investors and them were highly incentivized to increase value with time. And so it wasn't just like they got all, there was a stick there as well, I suppose.
So in terms of the regulatory environment, you guys feel like it's, bounding the box for folks in the United States, or is it, a thing we should leave relatively unregulated?
Well, my opinion on what we ought to do is not necessarily the reality. I mean, I tend to think people should be allowed to do what they want with their money, and that accredited investor laws are a big handout to VCs in terms of, they basically say prior to ICOs, you pretty much have to do it. I mean, the laws around investment in the United States, I think, are like kind of insane and quite onerous. But at the same time, I think that what we've seen from what I would like to be is not the reality. I mean, I think the SEC has sent a pretty strong signal that if you are selling a token with anticipation of building a product, that is a security, regardless of anything else. So if you're selling that token and the product doesn't exist, that's a security. That is the stance that they've laid out. So that basically means that basically all of these ICOs are securities. Whether they will in reality go after all of these, I think is very much an open question. But the message that they've been saying is that they're all securities. That's what I read into it anyway.
Yeah. So another thing I would point out is, regulators don't like roll out of bed in the morning and say, I'm really going to make somebody's day terrible today. This is not, well, I don't know, maybe some do, but like they are responding to a social request to protect
Who's
some
requesting?
investors.
I mean, the people who are requesting it. I'm sorry, I'm not to be confused. The people requesting it are people who want to be protected. I don't see it in calls coming from investors for the SEC to regulate ICOs. I see it coming from parties who have other interests calling for the SEC
That
to
may
regulate
be,
ICOs.
but look at why the SEC exists in the first place. They were definitely created to stem a disaster that was looming in the market. I mean, the market crashed, and then ultimately a bunch of people's wealth is wiped out, and so that's what it was created for. I'm not saying that is all of their motive right now on ICOs, but I'm telling you, the bottom is going to drop out. A bunch of people will get screwed in this, and there will be a reaction to that.
I think the number 9 ranked token right now is a token called BitConnect, which is a transparent Ponzi scheme. Its market cap, I think, is somewhere around $1 billion. And you put money in, and then as more people put money in, you get paid out. And of course, as we all know, at some point, there's going to be several $100 million that there's no more money coming in, and then that's just burned money. And I think a lot of the people putting money into this don't understand that that's how it works. It's not clearly advertised that at some point the party stops and people lose money. And so I think that this is what the SEC cares about, and I think that this is one example among a whole bunch in the space where I would expect the SEC to step in, because I do think that everyday investors, mom and pop investors, are getting burned by schemes that they don't understand and don't understand have been set up to trick them into giving money that they're not likely to get back.
Well, it's clear regulatory is always catching up to the things that are happening. And there's no way to ever be very prescriptive of those. And so it's interesting to see as these blockchains proliferate, lots of different peoples are kind of tinkering at the edges. And I think you don't really know where the edges are until that edge has been defined, because somebody's kind of stepped over it. And I think through time, that's what we'll see. But bringing it back to the positive of all the potential of this, I would love to have you guys tell me about a project that you find particularly fascinating that's not one you're working on, that really excites you, and just tell us a little bit about it and why you find it interesting.
So I don't have a good answer for you right now, but just to talk about the regulatory thing, I'm actually really positive about that. We have programmable money. Suddenly so if you wanted to make a project, here it might be, you can, instead of regulating after the fact, you could actually say, look, here's my regulations. Lawyers essentially turn into coders, and they say, we need this, and this. And if all those things are checked, then the transaction will go through. Oh my goodness, that completely rewrites, regulation and how that's done, and how enforcement is done as well. I think, you look at this as a regulator, you could see this as like an absolute gold mine. So that's not a project.
No, thank you for the perspective. Great. Projects that you guys think are particularly interesting.
So, in terms of I'll talk just general problems. I'm not necessarily. I haven't looked at the specific solutions enough to say that I really endorse the solutions, but I'm really excited about Futures markets, the FTC shut down InTrade a couple of years ago. I thought InTrade was absolutely amazing. I think futures markets are a big win for humanity. And
Can you describe
futures
a
markets
futures
is
market?
basically the idea that we can have options and contracts on virtually anything. So we can have contracts on who will be the next president, who will be, what ICOs will the SEC crack down on? Any arbitrary event, we can create a contract and bet around. I think this is really, really valuable information. Nothing tells you as much about how likely something is as how much people are willing to put money where their mouth is. And so we can get far more accurate predictions by using this technology. The FTC considers it to be gambling. I think it's a win for humanity. And so whether it's Bitcoin Hivemind or Augur or some of these different technologies, if whoever solves this problem in a good way, I think it'll be really wonderful. And yeah, we'll just go with that. We'll go with that as an answer.
So one technology I'm really excited about, and I'm very focused on scalability. I think if everyone's going to be using these public blockchains, they have to scale. And so there's been a lot of progress on having a blockchain which, say, once someone spends money to someone else, there's a transaction of a particular size. But you can aggregate a number of those transactions and just have like a constant sized thing get added to the blockchain for a unlimited number. There's a couple of different ways of doing it. I won't talk about layer 2 because that's the one I'm involved with. But another on-blockchain approach to this is Mimblewimble, which has some incredibly interesting cryptography, which sort of shows that you can have a blockchain which has a history, and it can prove that everything has been done correctly without giving you every single thing in that history. And there's been some talk about this technology called recursive snarks that may also allow that to go even further. So I'm just very excited about it from a like systems technology. If we can get these things done, and Mimblewimble is pretty close to being a deployed technology, we can see some major scalability benefits.
From the technical world, I think that there's a project that a lot of people overlook, which is doing more than any other project in the space to push the boundaries of the capabilities of blockchain. And it's going to sound like a silly answer, but I think Bitcoin is I think Bitcoin gets a bad rap as being not very innovative next to Ethereum. But I think that in 2017 alone, the amount of innovation that has come at the protocol level, not necessarily the user visible level, from Bitcoin Core and from people working on Bitcoin has just been immense and amazing. And I think that Bitcoin's number one for a good reason. And I think it's the one that people should be keeping the closest eye on, even as all this other candy is showing up in the ecosystem.
All right, you got me. I'm going to add one. So that's an excellent point, David. So the one of the things that's sort of happening in that area is the Lightning Network, state channels for Bitcoin. I'm also very interested in state channels for Ethereum, the Raiden project. So those are two things I'm looking at as well.
Well, that's helpful. And I wanted to turn it open to questions from anybody in the audience. Brad?
So thanks for speaking. So I believe blockchain will change the world, but I think it will be in a slightly different way. So clearly it's going to change the financial industry and how we track assets and proof of concept and trusted third parties. But the disconnect I see is when we talk about that blockchain and fully distributed systems will replace companies is in kind of core facts of incomplete contracts, right? And then residual rights of control, right? So there's been cases where distributed autonomous organizations got hacked and all this stuff, but there's more fundamental things like Pauline's paradox, where you just can't consciously describe everything you know. Like a pianist can't describe how to play the piano, even though they know how to do it. And so that seems to me the two biggest things that won't replace companies, because residual right, you have some asset, and if it's not explicitly described in the contract, then you can do whatever you want with your asset. But the same thing can't happen with smart contracts. And I don't think without machine learning or some statistical-based approach, you can encode everything in the contract, every contingency in the future.
So Brett, what is the question specifically?
So the question is how do you rectify like the point of where it's going to change financial industry to the point where it's going to change all companies and get around like Polanyi's paradox and complete contracts and residual right of control?
Perfect.
I don't argue that all companies are now obsolete. I think people will want to hire companies for things that they want them to do. I think what they will do in a distributed world is very different from what they do very monolithically now. I also don't think, it's extremely early days. Smart contracts that are, there's probably like 300 smart contract coders that are really capable of writing real solid smart contracts nowadays. That's nothing. Like, so ultimately, why would there not be, like, the DAO is an interesting example, right? So there was a bug in it, unintentional or not, probably was, and a lot of money was stolen. But then why couldn't you write a contract where there is a get out of jail free clause, an escape clause? Okay, you can argue that, it goes against the whole ethos of a distributed, world, and I need to rely on these things. But that's exactly why people hire companies. So, like, I think we're just so young yet that we haven't yet, you can only do so much with Ethereum. It's really not much. My cell phone's a lot faster than it, et cetera, et cetera. But like there's Oracle problems. There's all kinds of and it's such a constrained language at this point. I mean, we got a long ways to go, and I don't think, if you brought, an attorney in that has a lot of different considerations, they're not going to sit there and say, okay, I can codify each one of these. They're probably going to leave a back door somewhere where if it all hits the fan, we can go to court and seek due process. But I would argue that's part of a well-written contract ultimately.
Yeah, I would say that what makes blockchains super useful is that they're incredibly rigid, and that's great in blockchain is the most rigid way to interact with a stranger that I know of, and that's very useful in certain contexts like data storage, where I just want to know that if they lose my data, they lose money, and I don't need a backdoor clause. It's pretty straightforward. But if I'm doing something like, a relationship or like a companies, you don't want a company that's completely rigid, because the environment changes and things change, situations change, and you want a company to be able to adapt to the world as the world evolves. And so I don't think that blockchains will ever replace companies, because I think it's just the wrong paradigm to run a company by.
Generally agreed. I do think organizations continue to exist to develop and maintain these things, even if they're protocols. I think you're right that trying to make everything completely rigid is not the answer to everything, has significant trade-offs. One reference I'll make, there's a great essay called Crystals and Mud. It's from like the late 90s. I think it's out of Yale, that just talks about the trade-offs between rigid and human-interpreted rule systems. Highly recommended essay.
So I think there's an opportunity here between rigid systems where you can't do something and rigid systems where you have decided that things have gone wrong and you're taking it to mediation, but that it's very clear that you're taking it to mediation. And I think with a lot of this stuff, especially with, say, property deeds or real estate on a blockchain, you don't want a case where you accidentally signed the wrong person's address and now some random person owns your house and you lose it all. You'd prefer that if you did that, you could bring in some sort of mediation and solve that problem, but at the same time that it would be visible that you did that, so you can't sell your house and then take it back. And so I think finding that right social balance between things that are enforced cryptographically and things that are enforced legally or socially is a really exciting place. And I don't know exactly where we'll end up in that balance, but I think with some things, it won't just be completely cryptographically rigid, but we'll have backdoors.
Any other questions? One in the back, blue shirt. Yeah.
I would like to revisit the regulatory uncertainty question from a slightly different angle. Trying to reconcile Anders' comment from the very beginning about envisioning a future where frictionless instant payment and money can flow from one side of the planet to the other. And then Ethan's remark about Zcash or other projects where you're allowing somebody to move something of value in total anonymity. So I just asked a question to the panel. I think I know Jeremy's answer. Should a person be able to transfer value from one side of the planet to another completely anonymously?
In some cases, yes. You know, I don't see there's a $5 bill for a good reason. You know, I can give it to anybody and clear that I don't have it anymore and they have it. But there's also a reason why we don't print $10,000 bills anymore. You know, because it happens to be a great way to launder money. So I think it really depends on the you know, the type of transaction. But I still think even if you know if you've got a valid reason to send $100 million to the other side of the world, you should be able to do that like instantly. You shouldn't have to involve a third party if you don't need one. You know, if you don't choose to trust one. So I think these things should be possible, and it should be just as easy as me sending an email or a text or whatever.
Who decides what's a valid reason?
I guess, you know, I would say the societies you live in. If the society you live in has a very onerous policy, then leave that society. I don't know. You know, I think that this is sort of open, I guess.
So it's more in the background, but there is cryptography that would allow you to would allow me to anonymously send someone, say, $100 million, or not me personally, but allow someone to send someone else $100 million, and then anonymously, but also have a little proof that says, and this money comes from sources that the U.S. regulatory environment approves of, and so and then you can be confident that this money is like sane and approved and is not, you know, drug money or ISIS money or anything else, and also have no idea who sent it to you. And so I think that as the regulatory system evolves, I really hope that regulators do lean more heavily on the fancier cryptography that we have, because I think that we can get the privacy that we want while also getting the assurance that the regulators want as well.
An unequivocal yes. But for purposes of perhaps a more interesting answer, I think you could look at a lot of products, not just blockchain products, that are essentially a product that consumers would have liked that has been prevented by regulation, and therefore a lot of what entrepreneurs are doing these days is coming up with a way to create those products in a way that fits in with regulation. Like, I don't think a significant part of, say, the innovation around Uber or Airbnb was that exact thing.
So I think that if you are targeted by a government or of interest to a government, sending money privately with any sort of cryptography is a very difficult task without serious resources. And that if you have those serious resources, any non-anonymous mechanism of sending money, you can do in an anonymous way. So I think it's never this sort of like high-level question for groups like drug cartels, which have access to the banking system, or the Islamic State, which operated nodes on the banking system. I think it's below that level. Should everyday people, like, that's where that privacy is going to be. They're not actively being targeted by a government, and they don't really have much in the way of resources. And should they have some privacy there? And I would answer that yes. And part of my calculation on that is a balance. We're pretty much losing privacy everywhere else. We're probably net having a loss of privacy, especially with the destruction of cash. So maybe we can maintain some minimum amount of privacy in this one area of our lives while sort of it is dispelled everywhere else. And so I think that maybe that can be socially helpful. But I'm kind of a pessimist about that as well. Just given the ability to process like big data and the sensor networks that are now being deployed everywhere, it seems likely that like you'll get a little bit, but you know, you have to do a lot of cryptography to get that little bit, and maybe that little bit is enough to have a free society.
All right, one final very quick question. Are each of you willing to bet your lives that cryptocurrencies are here to stay?
I already am.
I don't like betting my life.
I think that the underlying technology is here to stay. I would certainly never bet anything significant on any one.
I would say yes with two outs. Out number one, that we continue to have things like the internet and technology. And out number two, no, just like
big out.
you know that is a prior, that is a necessary
it's a
condition
prior.
for it to exist. And out number two, it really depends on how you define cryptocurrency. I take a very expansive view, where it's not necessarily just a decentralized one, something like anonymous eCash, which was an earlier work, I would call a cryptocurrency. And so I think we're always going to be engaged in digital commerce, and that systems for doing that will get better with time. And so as long as we have things like the internet, we'll probably have cryptocurrencies.
Oh, thanks. All right, can you guys join me in thanking these guys for today's panel? Thank you, guys.